So the market sold quite aggressively today. In today's video, we gotta discuss what to expect tomorrow. I'm also going to be sharing with y'all one chart that really could change everything and the trend for this entire week. All right. So let's dive right into the charts. Right off the bat, we got the. Let's go to the SPY first. We got the SPY futures, and so far it looks like it's strapping bulls. The previous structure that I had on the SPY looked like this at first, and even on the SPY ETF, I erased the lines. It looked like this, and then I warned you guys about a potential break on Friday and a move up to 757. It didn't quite get that high. The volume a bit mediocre right here, and then today we had the gap down followed by the sell-off after a very nasty bearish pennant. It's again, the volume sucks here, all right, but it just took a sweet time on the way down and pretty much chopped throughout the entire day. It's not looking too great for the bulls right now. It's really not, all right. And let's check out the Nasdaq, and let's just pretend that we're looking at this thing anew, and we're trying to draw another perspective, because the last time I mentioned this one, I mentioned that the bears got trapped on the 8th, and then they pushed up for a little bit. It got up here on Friday just to trap the bulls today on Monday, right? So again, the situation kind of sucks, but let me try to see this in a different light. Let's go on the 4-hour, and then we're gonna draw the lines from here, way back here, and then we're just going to connect the first things we see. All right. Now that we got that drawn, somebody could argue that these bears, who look like they were down and out, are now hopeful, right? And they're looking at this, and they're looking to add even more for the move back down, because they realize, oh, this is just a fake out, right? Their stop loss typically, at least if I was shorting from here, my stop loss would be very tight at 29,800, right? And then I will patiently wait and see what happens. And if it goes down again and breaks below the appropriate entry, then I might chase it back with the stop loss being exactly the same price again, right out here. Right? And then I would just patiently watch, because the initial analysis that I would have at this time, which is down here, that line of 27,500, that would be the thesis again. Again, this is the part about trading that's kind of annoying, right? Sometimes the chart can be this messy. It can be real disgusting sometimes, but you gotta adjust with it. And I will share with y'all the trades that I took in between that time too. I will share with y'all that. But for now, with the Nasdaq, the bears are back in control again on the daily. And if we switch on to the weekly, the bears are definitely in control. Right. So we'll see how things turn out. Now, the stock. Actually, no, we gotta look at one more thing. Tomorrow the CPI report is going to be released, right? And they finally released the expectations. They are expecting a 0.4% reduction in the inflation numbers. I think that's quite aggressive. I really do, right? And if it turns out to be as expected, if inflation, wait, let me rethink this way. If it turns out hotter than expected and inflation stays high, that would incentivize the Fed to favor rate hikes versus rate cuts, and the market isn't going to like it. Again, a 0.4% difference is quite big, and I think it's kind of aggressive, and I think it's gonna come out at like 4% or maybe even 4.1. the market is not gonna like it, and then we're gonna see stocks collapse even more. That's what I think. Again, in these videos, I like to pick a side. I don't like to stay in the middle too much. I'm either bullish or I'm bearish, and if I think nothing's gonna happen, I just don't make videos. Right? So, so in this video, I am bearish. So we'll see what happens. We'll see what happens. Now, the stock for tomorrow that I want to share with y'all is none other than Google. All right. And I want to share Google with y'all for one simple reason. First and foremost, massive push to the upside. The bears are in control. They have been in control of Google for quite some time now, throughout most of June and now July. And now when we go into the daily, we got a rejection from Google after the gap fill. We got the gap fill right here, which happened like 2 weeks ago and last week. And then we got the rejection of resistance right here. And now we have on the 1 hour time frame, we have a bearish pennant that broke down after a rising wedge. All right, just look at what I'm about to draw. I'm gonna clean up the entire chart. The rising wedge, I saw that thing last week actually, on like Thursday, on this day, which is the 8th. That's Wednesday. All right, this is the rising wedge right here, a bit sloppy. This is the slop, right? But it did do what a rising wedge is supposed to do, and a rising wedge is usually bearish. We got the breakdown, the weakness, and then we have the sell-off on Thursday, and then we got the consolidation on Friday, and then today we have the formation of the bearish pennant, which broke down in the last hour of market hours right here. Right, so this is the bearish pennant breakdown. And then if you go into the 5 minute, you can see the same thing again, but a much smaller time frame, right here. And then the appropriate entry for this is right here for the move down, all the way down. So this is one of the reasons why I think the inflation report is going to be hotter than expected, which is going to drive tech stocks down. And the price target for not just this, but also that big rising wedge. Let me show you guys real quick. So when did I discard? All right, so we got this. No, not this. Here. This is from July 13. No, it was... Let me go back again. Let me go back. There is a lot of setups. Yeah, so this is it. July 10th. There we go. This is the ascending wedge. Y'all see. Again, I'm going back. That way I can really see the thought process. I was bearish on it for quite some time. And the price target is right here at 330. And today is the first day that it closed below that white line right there. All right. So again, we'll see what happens tomorrow. The situation is not looking great for bulls. We got Tesla right here. Tesla didn't close below where I wanted it to close, but it might break down tomorrow. Might. But for now, again, we got Google with the breakdown, right? So we'll see what happens tomorrow. It's looking quite good for the bears, and I expect it to drop. Now let's check out another stock. Yesterday I told y'all to not be too hasty to short Meta, and Meta showed a bearish pennant just like Google, right here, right here. So we got the rejection again of 675, followed by the bearish pennant, followed by where short sellers will be piling on for the move to the downside. All right, I do think after what happened today that we're gonna see this move down, and that we're gonna see the gap fill on the left down to 630. It wouldn't surprise me at all because of the way it's looking. And when you combine these two candles, this is a tweezer top. If you don't know what it is, look it up. All right, I don't have it pulled up. I just realized this is a tweezer top. All right, But you see, it's a very bearish candlestick pattern. And typically what happens is what I just told you, a drop. The next stock that we gotta look at the banks, because the banks have earnings. Goldman Sachs have earnings tomorrow. All right, tomorrow morning, right here. This is a head and shoulders, which means I'm bearish on this one. Like, I would be shocked to see this thing spike up above 1100. Short sellers would really be crushed. They really would be crushed, right? Well, what's typically supposed to happen is that the company is not supposed to do, at least the reaction to the earnings is not supposed to be great, regardless of what they put out. Just to make sure that this turns out to be a very clean pattern where we drop below 1,000 and then we just flush on the way down, right? It might take a day or two to really get down to where it's supposed to be, which is like 950. All right, this is literally the same analysis I gave you guys about SNDK. Right, they both look exactly the same. So we'll have to wait and see exactly how this thing plays out. And I told y'all I will share with y'all the trade that I took between Friday and today. All right, so first and foremost, let's go back to the Discord. That was the Amazon trade, which I made money on between the 9th and the 10th. Right, I sold it at 251, and then after this I took a swing trade over the weekend on Microsoft, which is why I released that video for y'all, and I told y'all to watch it for a retest of 392. Right, so I got in right here at 385.50, and then I ended up selling all of my contracts right at 391. Ultimately, it went all the way up to like 393, which was shocking to me because it played nasty games in the morning, showed terrible price action before making it up there. But nonetheless, there was an opportunity for everybody to get paid on Microsoft today. All right, so that's pretty much what happened, and that is my honest thoughts on all of the stocks, and that's the end of the video. Again, I am not your financial advisor. Do your own research and make your own decisions. All right. Don't forget to follow me on social media at Patternology Lab on Instagram and on X. And lastly, don't forget to like and follow for more.